Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HUADIAN Power International Corporation Limited Annual Report. HUADIAN Power International Corporation Limited is a diversified energy company that provides a wide range of businesses and services in the power industry. The company's primary focus is on the sale of power and thermal products in China, where it operates 46 controlled power plants with a total installed capacity of over 59,818 MW. The company's business operations can be broadly categorized into several key areas. Firstly, HUADIAN Power engages in the construction and operation of power plants, including large-scale fuel-fired power plants, coal and gas-fired power generation units, and renewable energy projects. This includes both coal-fired and gas-fired power generating units, as well as hydropower generating units. In addition to its core power plant operations, HUADIAN Power also provides a range of related services, including power project consulting and engineering services, power construction project management and consulting, and investment and asset management. The company is also involved in the coal production and sales business, as well as the sale of coal mine machinery equipment and accessories. Furthermore, HUADIAN Power has expanded its operations to include coal wholesale business and the construction and operation of wharf projects. This diversification into new areas reflects the company's efforts to adapt to changing market conditions and expand its revenue streams. Overall, HUADIAN Power International Corporation Limited is a significant player in China's power industry, with a diverse range of businesses and services that position it for long-term growth and success. HUADIAN Power International Corporation Limited maintains a market capitalization of $65 billion, broadly in line with the industry peer group. HUADIAN Power International Corporation Limited trades at a lower price-to-earnings ratio of 8 times and a higher price-to-book ratio of 0.95 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it appears. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than HUADIAN Power International Corporation Limited itself. The leverage on the balance sheet appears elevated, with liabilities of 62% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 5.41%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in the energy sector are multifaceted. On one hand, a decrease in power generation and on-grid power sold has led to a significant decline in revenue. This is evident from the 10.95% operating revenue decrease and the 9.6% drop in power generation revenue. However, there are also several factors contributing to revenue growth. The increase in installed capacity at various power companies and the rise of new energy sources have led to an expansion in electricity generation. Additionally, a shift towards new energy consumption in some regions has further boosted revenue. Macroeconomic conditions, such as increased GDP and power consumption, have also contributed to revenue growth. Industry-specific factors have played a significant role in driving revenue growth. The primary industry has seen a 9.9% year-on-year increase, while the tertiary industry has experienced an 8.2% year-on-year increase. Even urban and rural residents' electricity consumption has risen by 6.3% year-on-year. These factors have collectively contributed to the growth in revenue, offsetting the decline caused by decreased power generation and on-grid sales. The company's financial performance indicates a consistent trend of generating positive operating cash flow. The data shows that in 2025, the net cash inflow from operating activities reached RMB 27,221 million, marking an increase from the previous year. In 2024, the company generated RMB 19,457 million in operating cash flow. This upward trajectory suggests a stable and improving financial position for the company. The company's debt level has shown a significant increase in the past year. Long-term debt specifically rose from RMB 114,319,119 in 2024 to RMB 123,819,111 in 2025, indicating an increase of RMB 9,499,992. This upward trend suggests that the company is taking on more debt obligations. However, a closer look at interest expenses reveals a mixed picture. On one hand, total interest expenses have increased from $2,811,919 in 2024 to $3,511,919 in 2025, indicating an increase of $699,000. This suggests that the company is paying more for its debt obligations. On the other hand, interest expenses on loans and payables actually decreased by 16.5% from $3,869,321 to $3,249,008. This discrepancy may indicate a shift in the company's borrowing habits or a change in interest rates. There is no significant activity to report on acquisitions and divestitures. The company has not made any notable purchases of other businesses or assets, nor have they sold off any major divisions or subsidiaries. This lack of movement suggests a stable and focused approach to business operations. The company has a history of paying dividends to its shareholders. In fact, it has proposed a final dividend of RMB 0.14 per share for the year, bringing the total proposed dividend for the year to RMB 0.23 per share. This indicates that the company is committed to returning value to its investors through regular dividend payments. Furthermore, the company has also paid out significant amounts in dividends during the current period, with a total of RMB 1,417,835,000 being distributed among shareholders. This demonstrates the company's ability to generate cash and distribute it back to its owners, which is a positive sign for investors looking for stable returns on their investments. There are valid concerns regarding inventory buildup and potential supply chain disruptions. The issue of excessive inventory is a pressing concern, as highlighted on page 20 of the report. This problem can have far-reaching consequences, including wasted resources, increased storage costs, and decreased efficiency in production and distribution processes. If left unaddressed, these issues could lead to significant disruptions in the supply chain, ultimately affecting businesses and consumers alike. That concludes the financial summary for HUADIAN Power International Corporation Limited. Feel free to comment below, and I will be happy to answer them when possible.